The Future Homeowner Show.
Hello and welcome to the Future Homeowner Show. I'm your host, Eric Helan. And on today's episode, we're really going to be covering some news articles that are going on, some headlines that we need to discuss that may impact you as a first-time home buyer. We're going to take a deep dive into some of the mistakes that first-time home buyers make, being that it is National Homeownership Month. We're going to talk about some mistakes, how to avoid them, and how they could potentially impact your ability to purchase a home. And then we're going to dive into a couple of questions in our Q&A section. So let's jump into our pulse of the market and let's talk about a couple of articles that might be catching your eye.
Pulse of the market, what's moving out? Pulse of the market, we'll show you how. Rates in the money, inventory low, hot homes get picked before they even show. Neighborhood numbers count every trend. We reg the signs and explain the end.
So today we're going to talk about this first article that I saw. This was on realtor.com, and it was actually talking about an area in California. If you're not from this area, you may not know, but it's a city called San Jose, and that's in the Silicon Valley. Now, Silicon Valley is kind of the area where all these big tech companies are. You have your Facebook, Meta, the Googles, all these big tech companies moved into this area. This is where they get a lot of funding to build their companies. However, it does have an impact to the housing market in the area because now you have all this influx of money and home prices are going up. People who live there for years are selling at a higher price. And a lot of times, first-time home buyers aren't able to afford to live in this area. It's pretty sad, actually. There are a lot of folks who get jobs in the area who actually live out of their vans or have to live with 6 different roommates or whatever the case may be in order to afford the neighborhood. So, this is definitely a big issue that we're seeing in that area. And we're going to talk about maybe a potential solution. It's going to be a pilot, but this article was pretty good at introducing maybe a solution for this issue going forward. Now, this particular article is talking about a program that is impacting teachers and other public workers. So they're looking to subsidize rent for teachers and public workers who can't afford to live in the area. Now, imagine all the schools and these teachers who aren't making enough money to live in the area. What did they do? You don't want your son or daughter's teacher living out of a van. And so this is an issue that needs to be addressed, and they're rolling out this new pilot just to try to save them some money on rent in order to afford to live in the area, and then they can start putting some money away in order to buy in the area. And so that's the long-term goal of it, and I'll talk a little bit about how this is being introduced. So, I mentioned San Jose and Silicon Valley being, one of the most expensive areas to live. Rent is over $3,300, which is twice the national median of $1,673. So that is a big issue. It's just so expensive to even rent in the area. And so what they're rolling out is this program called the Lower Income Voucher and Equity Pilot Program. And so they're utilizing city funds in this residential building called the Fay. Now there's 197 below market units. Now these are going to be 1 and 2 bedroom units that they're going to utilize. And what it does is it gives them first dibs as to getting into these units. So if you're a firefighter, a teacher, a police officer, you're going to be kind of moved up the ladder to get into these places, and they're going to subsidize the rent by a couple $100s. So, it could be anywhere from $200 to $300 that they subsidize it, but the 1 bedrooms were actually going to be at $2,900. The 2 bedrooms at $3,450. That's what they go for. And so you could be paying like $27 for the 1 bedrooms or $3,200 for a 2 bedroom. So there are some details in the article. The biggest thing is that, how they came about utilizing this program was this building was possibly facing bankruptcy, the developers. And so they came to the city and they kind of talked about this program, this subsidy that they may be able to utilize. And what it does is it gives the city a 10-year lease on the property to have these units available for affordable housing. And so again, even though we talk a lot about buying your first home, if you can't afford to pay rent in the areas that you live in, you're going to have a very hard time saving money in order to buy a home in that area. And so this is a good first step. It's going to be a long process, and this is only a pilot. So, take it with a grain of salt. Don't think that, this is going to solve all issues. It's not. There are still definitely other issues that need to be addressed in the area, but this is a move in the right directions. And so they do have these applications available now. They're accepting the applications through their website, and they're going to accept them through June 30th. And so they're going to do that and have people move in as soon as August 1st. So great move in the right direction. Like I said, it's not a solution to everything and all the issues that the city is facing. But if our teachers, our firefighters, and police officers can afford to rent in the areas that they work, I think that is important and is vital to them moving up the ladder in order to buy. So that was the first article that I wanted to cover. You can check that out on realtor.com. Now, the second one kind of has an impact on current homeowners and their trends and how it impacts you as a first-time home buyer. So what we're seeing is that more homeowners right now are actually remodeling their homes instead of selling their homes. So a lot of folks may, get into their first home. It's an introduction to the housing market, right? To home ownership. And so oftentimes they're buying their first home, might be small, might be a condo or a townhome, whatever the case may be. The idea there is that most Americans would actually upgrade as the family grows, as income grows, and they would make a move so that property would hit the market to sell. They sell it, they take the proceeds and buy the next home. We're not really seeing that trend right now. So what we're seeing is that people are oftentimes just upgrading their home instead of selling it. And typically this is happening, especially with single family homes, not so much with the condos and townhomes, and I'll explain why. So the remodeling that we're seeing is that they're actually adding space, adding a bedroom, bathroom, kitchen renovations to make the kitchen what they desire. And so we're seeing that there are a lot of people who would much rather just renovate the home they live in than to go through the selling process and trying to find another home. And one of the major reasons why we're seeing that is because they already are in interest rates that are much lower than current interest rates. So you have to imagine if you locked in an interest rate at, say, 3.5% to buy your first home, and now current interest rates are 6.5%, you're trying to move to a bigger home that's typically going to have a higher price, and it's typically going to have a higher interest rate. And so all those things combined make it very difficult for you to make that move up. And so what they're seeing is the homeowners who are first-time home buyers, they'd rather just utilize maybe $20,000, $30,000 of their equity, renovate the home that they currently live in, and stay put. So this impacts you as a first-time home buyer because there's going to be fewer homes on the market. We're not going to see the influx that we traditionally would see because there's just not a lot of people moving. And from this article, what they're talking about is, typically if anything is about $20,000 in renovations or below, they'll typically do it. Once it starts getting up to like $50,000 in renovation, then we don't quite see the same motivation. So only about 16% of those staying put are renovating between $20,000 and $50,000. So it is the kitchens are a big issue, bathrooms are a big issue. People want to have the additional bathroom and the upgraded kitchen. So we are seeing that, and it does impact you as a first-time home buyer. So it's something to consider as you're thinking about the market and how many homes are available to you. It has an impact on the competition, which can then raise prices for you as a first-time home buyer. So those are the two articles that I wanted to cover. You can check that out. That is on Redfin, and just see what's going on so you have a better understanding of what to expect as you enter the home buying market. So that's all I wanted to cover for the pulse of the market. Let's take some time to jump into our deep dive.
Deep dive, go a little deeper. Deep dive, get wild.
All right. So, being that it's National Homeownership Month, I really wanted to talk about some potential mistakes that most first time home buyers make. These are common. And so I want to provide this information as, guidance, and hopefully that you would avoid these mistakes, but also to encourage you that even if you make mistakes, you can still recover. There's still ways to get through. Don't feel like you have to, be perfect to start this process, or that you have to have all the answers to start this process. You don't. These are common mistakes, and so I want to make sure that you're aware of them so you can avoid them, and then show you how they may impact your home buying journey. So, the biggest mistake that we often see is the home buyers who are out looking before they get pre approved. And this is extremely common. People will typically start online, so they'll save homes on Zillow or Redfin or whatever the case may be. And then some will actually go to open houses and start to look at homes in their area, and they're not pre-approved. What this does is it creates this emotional tie to properties that you're not necessarily tied to. There's running jokes and memes and things online about people who get upset when a home that they saved on Zillow sells. And it's way out of your budget, and you're not really in the housing market. You're just kind of saving homes that you like. And so I encourage you, get pre-approved, talk to a loan officer, find out what your budget is, start looking at homes once you have a pre-approval in hand, so you don't set yourself up for this emotional roller coaster where you're being let down because homes are gone that you really liked, even though you probably weren't qualified to buy them in the first place. So that pre-approval is going to give you clarity, it's going to give you that confidence and credibility. When you're going to work with a real estate agent or you're making offers, you're going to need that pre-approval in order to take that step. So that is definitely the biggest mistake that we see. Second to that is when folks are only thinking about, oh, how much do I have to have as a down payment? And there's a lot more to buying a home than a down payment. So if you're not familiar, you do have your down payment, which, depending on the loan program that you're using, could be anywhere from 0% up to 20%, whatever the case is. But you also have closing costs. Closing costs here in California, we say, are about 2 to 3% of your purchase price. And those closing costs have to do with, getting your loan and escrow process and insurance and things of that nature. Those are your closing costs that you need to be prepared for. You also have moving expenses. It can be costly to move. Even if you're not hiring somebody to move you, you need boxes. Do you need storage because there's a window of time where you have to move out and you need to kind of store things. There are going to be moving expenses as you prepare for that process and that transition. It's so misunderstood about the buying process. Like, hey, when you go to move, you think, oh, it's going to be an easy transition. But oftentimes when you start the moving process, you start to realize you have way more stuff than you thought. So give yourself some time, some grace, and have some money set aside for that process so that you're not surprised by those expenses. Another one that's a big one is repairs. You don't want to utilize all your money, put it all into the purchasing process to where you have no money left over in the bank to be prepared for repairs that may come up. And so you just want to have some savings after you close, some emergency savings, things that may come up, because guess what? You're now the landlord. So there's nobody to call when these issues need fixing. Unless you're like me and your best friend is a contractor, because I can call him. But there's still going to be cost to doing that type of work. So you just want to have some money on hand so that you're prepared financially for the milestone and you can maintain for what may be next. So that is definitely mistake number 2. Mistake number 3 is ignoring your credit. We talk a lot about folks who just say, oh, I have bad credit, I can't buy. But what is your credit? Have you pulled your credit? You get an annual credit report for free. You get to look at it every year, once a year. But I advise you go to a place like MyFICO, pull your credit report and all 3 scores, and you want to look for potential issues. And the reason why this is a mistake is because sometimes you just ignore it, and there are things on your credit report that are incorrect or outdated or whatever and need to be addressed, and it's actually hurting your score over time because it's sitting on your credit report. So know what your credit report says, know what your scores say. If you find errors, reach out to the credit bureaus and fix them as fast as you can so you can improve your credit score before you start the buying process. Mistake number 4 is actually buying more home than you can comfortably afford. So when you talk with a loan officer, they're going to qualify you based on your income and your debts and all these different things. And they're going to say, hey, you're qualified and you can buy a home up to $1 million. Well, maybe you're not comfortable with what that payment looks like at $1 million. So don't live to pay the mortgage. If you can find homes in the 700,000-800,000 in your area, and that's more affordable, you're more comfortable with that mortgage payment, buy that home. There's plenty of time for you to move up as you build equity in your home, as a home appreciates, as you're paying down debts, improving your credit. You're going to be financially better off as you own the home, and it's going to improve your credit a lot faster. So you're going to be in a better position to buy $1 million home down the road. You don't have to maximize whatever that loan officer says you're qualified for. So buy a home that you're comfortable with. There still may be a sticker shock. I'm not saying don't, be afraid to make the move. It's probably, your mortgage is probably going to be higher than what you're paying in rent in most areas, but you still know what you're comfortable with, especially when you have a budget and you know how much you can actually afford to pay on that mortgage. So definitely don't buy a home that's bigger than what you need or is very uncomfortable for you financially, because the financial stress will make you regret and hate that home. So don't do it. Mistake number 5 is actually similar to what I was talking about earlier, as to, draining all of your savings. So folks who will spend all of their money to buy a home and have nothing left over, cashing out the retirement accounts and doing all those things. So, you want to make it happen, which is great, but you want to have some net there, so that you're ready for emergencies. You're not financially panicked when things do come up, because they will come up, and you're not just going to start putting all your expenses on your credit card and building up your credit card debt, because now you're paying 20-30% on credit. And so you want to just maintain some reserves after you close and expect some surprises. They may be small, but there's going to be some expenses that come up. The goal isn't just to buy a house. I know that, we always talk about buy a house. That's great. But we want to make sure that you can successfully keep the house. That's even more important. So definitely keep that in mind. Let's see. We got mistake number 6 is actually going to be making big financial changes during the escrow process. So oftentimes your real estate agent will warn you about this as you're going through the home buying process. They're going to tell you, hey, don't go buy a car. Don't go buy the furniture for the house before you close. Taking on those additional debts can actually impact your ability to close. And so your lender will be running your credit as you get close to the close of escrow, making sure that you didn't go buy another house or buy a car or do all these other things that we've seen in the industry. And so they're going to make sure that, the numbers that they ran at the beginning are still the same. You're still working, your debt is still at this level. So don't go take on new debts while you're in that escrow process, because you can actually hurt your ability to close. And then the last mistake is not working with the right professionals. Mistake number 7, not working with the right professionals. So this is common because, as a first-time homebuyer, you're not necessarily sure who to work with. And so you maybe get advice from family members, friends. I'm not saying not to use a real estate agent or loan officer that is a friend or family member. Just make sure that they're qualified, make sure they're licensed, make sure they're experienced in the things that you need them to be experienced in. For instance, if you're buying, a VA, you're utilizing the VA home loan benefit, make sure you're working with professionals who are familiar with that program, because they'll make all the world of difference. So use the professionals, get some referrals, see if you can talk to some of their past clients so that you know what you're getting yourself into, because it is going to be a long-term relationship. When you're closing with a real estate agent and loan officer, even after you close on your home, the goal is to maintain that relationship. So when the opportunity comes to refinance or sell that home and buy a bigger home, you still maintain those relationships, still working with the same professionals years down the road. So you want to work with experienced people who educate and will guide you throughout the process. People who will explain the process clearly so you're not surprised by every step. And the right team on your side can reduce the stress and make the process enjoyable. So definitely make sure that you're working with the right professionals. at the end of the day, I want to encourage you, and I want to wrap up here, but I want to encourage you as you go through this process. Mistakes happen. There are things that you may do before applying for a mortgage, during the process, or even after you close. So don't be afraid to not make mistakes. But when you have the professional guidance in your corner and they're preparing you for every phase and every step of the process, you're going to avoid the major pitfalls that would actually prevent you from buying the house. And so that's why it's so important to be educated and work with professionals who know what they're doing. So it is National Home Ownership Month. It is an opportunity for first-time home buyers to get their foot in the door, buy that first home, and start your home buying journey today. Don't put it off just because you don't feel 100% ready. If you need help, reach out to us. That's what we do. We can guide you through the process, help you take the first step so you're ready to go when the time comes. That's all I have for our deep dive today. I'm going to jump into a couple of questions we have for our Q&A session called Real Questions, Real Answers.
No more guessing, no more doubt. Real steps, real answers. That's what we're about. Real questions, real answers. Ask it plain. Real questions, real questions.
All right, so we got two questions that I want to address quickly. And I want to talk about these because, these have come in and oftentimes first-time home buyers may have these hurdles or may not know how to handle these things. And so the first question that we got was, how do student loans affect my ability to buy? So student loan debt is a major issue affecting this generation. Going to school costs quite a bit more, does require more people to take out loans in the hopes of repaying those loans when you get employment. But when it comes to buying a home, it could impact your ability to buy. And there are ways that you can kind of work through this, but really what I would suggest is having a conversation with your loan officer about the debt that you have, because this is going to be very specific to your journey. So let's say if you have $10,000 student loan debt, it's going to be very different than somebody who has $100,000 in student loan debt. Also, the type of repayment plan that you're in would impact your ability to qualify as well. So a lender will typically look at your student loan debt, use 1% of it, divide that by 12. So let's say you have $100,000, you're looking at, $1,000. If you have $100,000 and you're looking at 1% of that, then it's $1,000. They would use that as like your payment. And so that's quite a big payment. Even if you're not currently making that payment every month, they have to use that for your debt to income ratio. But if you're already in a payment plan and it's already coming out and it's on your credit showing, hey, I'm paying $400 a month for my student loans, they're just going to include that in your debt to income ratio and still qualify you just like that $400 was a car payment or whatever else. So you can definitely still buy with student loan debt. Don't let that hold you back. Talk to your loan officer about the amount of debt that you have and the type of repayment plan that you're in, because that will determine how they're going to look at that debt in order to qualify you for your home mortgage. So don't let that stop you. If you have student loan debt, you're not alone. You can still buy a home, but just talk to your loan officer about how to do that. The second question that we got is, should I pay off all my debt first, or should I start saving for a down payment? This is a good question. It's kind of like the chicken before the egg. So when it comes to debt, paying off debt, you got to make sure that you're paying off the right debts. So we talk about pulling your credit report, looking at your credit scores, making sure the information is accurate. But then you want to start paying off the right things. Everything on your credit report doesn't necessarily need to be addressed before you buy a home. Now, if you have collections, bankruptcies, if you have things that are, some of the bigger issues, those need to be addressed immediately. But if you have certain debts on there that aren't really, major, like maybe the payment's only $40 a month, pay, and let's say you owe $5,000, it may not make sense for you to pay off $5,000 to save $40 a month. So again, this is a conversation you have with the loan officer, but you don't need to pay off everything on your credit report to buy a house, number one. Number two, you need to know what are the right things that you need to be paying off so you're not spending money that you don't need to spend. And then, yes, I would suggest that you start saving for a down payment after that, because there are programs that you can utilize for down payment assistance, that will pay your down payment for you. And that's going to be based on, your credit and things of that nature. So paying those things off, getting your credit in order first and foremost would be the suggestion before you start to save for a down payment, because again, there may be opportunities for you to utilize programs for your down payment once you have the right credit. So definitely keep that in consideration. That is my advice. Pay down the debt, know what your debt is, pay off the right things, and talk to your loan officer about how to pay those off and when to pay them off. So you're not spending all of your money, all your capital on paying off things that don't really matter at the end of the day. So that's all I have for the Q&A session. I hope you got some great value from today's episode. It is National Homeownership Month. So hopefully you're taking the first steps to putting a plan together to buy your first home and spread the word. If you're subscribed to our podcast, spread the word to others who may be looking to buy their first home. We want to impact as many people, educate as many people as we can. So that's all I have. And I hope that you have a blessed day. Take care.
The Future Homeowner Show. Yeah, we taught that first key glow. Let's go. Yeah. Savings on the table, dreams in the frame. First time buyer, we know your name. Credit down payment, what's in the plan? We make it clear so you understand. Take a breath, we got you one step at a time. No pressure, just truth. Now lean in, hear the voice. Your home starts here with the right choice. The Future Homeowner Show, we break it down. Yeah. The Future Homeowner Show, from start to close. Ooh.